A very good afternoon to you. Asian stocks markets ended the first day of the new month in the red, with steelmakers in particular registering declines on the back of President Donald Trump's threat late on Friday to double tariffs on imported steel and aluminium to 50% effective from the 4th of June. The Nikkei share average declined by 1.3%. The Hang Seng Index lost 0.57%, while the Shanghai Composite Index ended the session down 0.47%. Over in U.S. markets, they ended Friday on a negative note. This as market jitters were driven by more threats from U.S. President Donald Trump around trade tariffs. Trump alleged that China had violated a trade agreement between it and the U.S., hinting at possible consequences, causing yet more nervousness in the markets. There was also talk about more restrictions on U.S. tech companies dealing with China. Despite the volatility in the month of May, however, the S&P 500 rose by 6.2%, the Nasdaq surged 9.6%, while the Dow Jones Industrial Average climbed by nearly 4%. On the last day of the month, the Dow Jones Industrial Average rose by 0.13%. The S&P 500 ended flattish, down 0.01%, while the Nasdaq Composite Index declined by 0.32%. Looking at local indicators right now, we see that the all-share index is down slightly, down 0.1% at 94,289 index points. The rand is trading at 17.93 against the US dollar, 20.49 vis-a-vis the euro, and 24.29 against the British pound. On the commodities front, we see that gold is trading at $3,350 an ounce, platinum at $1,047 an ounce, while Brent crude oil is trading at $64.80 a barrel. All right, for more on the markets now, let's speak with Roy Mutooni. He's a market analyst at Sanlam Investments. Thanks very much, Roy, for joining us. So it's not a great start to the new month with Trump's threats around tariffs yet again. So I suppose we expect more tension and therefore more uncertainty for market players.
Hi, Nampa. Thanks for having me. Well, absolutely. I think that's the sentiment that we have now. It's very difficult to tell when any of this is going to end, what the scale is, and I think the legal aspects of these tariffs that just emerged late last week just make it a whole lot more complicated. I think the president of the U.S. is not going to let it go easily. It's important for him to find a way to fund his big, beautiful bill, and that way was tariffs. If the tariffs are not being allowed, he's going to have to find some way of squeezing it through. And unfortunately, for us market participants and for all the people who manufacture or deliver into supply chains, that means that for the next 6 to 12 months, you're going to keep guessing.
So what then is the strategy for guys like you who are managing people's money in a situation like this? Because it's different when it's just a blip. But this has been going on since Trump took office, and it's very unsettling. How do you have the confidence that you're making the right decisions with the monies of the people that you manage?
So that's always a difficult question, but I think you have to look at it in a multifaceted way. First of all, I think the investments that we make are long-term investments, and where we start from is valuation, quality of business, quality of company, and the moat around them. These matters that impact over the short term are important because they could put you out of business, but they're not the be-all and end-all. What we look at is what's the impact on the business model, how competent are the management team to make a plan, as we've seen with many companies, specifically here in South Africa, and use that to drive our way through the difficulties. I think what we found over time is that once you're invested in a business that has solid balance sheet, firm gross margins, and a management team that has gone through the cycles, they generally tend to find a way through these difficulties. But no, it's not easy at all.
Absolutely. Well, nicely explained. Appreciate that, Roy. So the local market seems a bit subdued today, but it does appear that it's the resources sector that seems to be holding things up. And it's interesting to see, well, earlier oil prices appeared to have edged up despite OPEC Plus raising oil output. And also now we also see that gold is on the rise. Just speak to some of those factors.
Yeah, I think it's all around that uncertainty. So with the oil price, it's clearly because they didn't raise output as much as people expected, so it's a bit firmer there. Whereas gold, it's around this uncertainty. It's very difficult to know where growth is going. Remember, towards the end of this week, we're going to have non-farm payrolls. There's the issue around the steel tariffs. So and also the issue that's come up in the Ukraine war, where Ukraine bombed quite a few Russian planes. So it's not clear what the retaliation is. So geopolitics is taking a lot more space. The uncertainty around trade is growing, and the uncertainty around growth is also quite considerable. So that's why people go hide in gold, and that's probably why you're seeing the gold stocks rallying and everything else selling more.
Yeah. Roy, your quick comments on the May APSA PMI number. It came out at 43.1 index points. That's down 1.6 points. We have the Q1 GDP number coming out tomorrow, and I just wondered what sort of contribution you expect manufacturing to have, given that the PMI has been down for 7 consecutive months.
I think if you look at, I think on Stats SA, they have a very good document that shows the trend line of most of these industries, and everything is going backwards. Literally from January till now, the only thing that's been positive has been new and used vehicle sales, new vehicle sales are probably up about mid-single digits. Used vehicle sales are also up, but everything else from manufacturing and production and logistics, everything's gone backwards. So I think when you look at the GDP number, it's very hard to be optimistic to expect a positive surprise there.
All right,
I think what you've seen in the PMI is a foreboding of what we will see in the GDP number.
Roy, we're going to leave it there, but thank you so much for your time and your insights as always. That was Roy Mutooni. He's a market analyst at Sanlam Investments.